Hey guys, Alex McIvor here with Dunnigan Realtors in Sacramento, California. Today I want to talk about, is the housing market going to crash or not? This is a topic that comes up a lot, but really I wanted to, I thought about the topic because Ryan Lundquist, the Sacramento appraiser who puts out a ton of excellent material, just had a blog post about it, and I thought he made some excellent points, and I just wanted to talk about those. So over the last couple years, 2020, 2021, we've had ridiculous price growth. It's really, no one predicted it, and truly it's unsustainable. There's no way it could continue, growing at the clip that it has. And in fact, even in the recent months, we've seen some slowing that we would normally see heading into fall. The typical cycle of real estate is it's hot in spring and summer, and then it cools off in fall and winter. So that's to be expected, and I think some people have taken, it's starting to slow as, oh no, it might be crashing. That's really not the case. It's still, when we compare, from this time last year, it's still fast. Things are still looking good. It's just not quite as fast as the spring, but that's to be expected. So the big thing that I want to talk about is really no one knows whether there's going to be a crash or not. I can, say I don't think there's going to be one. I think it's not super likely because the conditions now are very, very different from when they were 2007, 2008. That crash was based on totally different things. So I think we will see, eventually there's going to be a pullback. Prices will dip, but, if they go down 10%, that's not necessarily a crash where, in 2007, 2008, in Sacramento, there was a 60% dip in the median housing price. I don't think we're going to run into that. That said, no one really knows, but really the main thing with 2007, 2008, that housing crash, was the banks were giving anyone a loan. Basically, you just had to go off of what they said your stated income was, and they're really just trying to push people into getting these subprime loans. Today, we have much tighter lending practices. So here's a graph that Ryan put together going over the different FICO scores, so your credit scores. And you can see the recent numbers. You see that portion of the light blue. That is much higher. That's the excellent credit rating. So you can see the proportion of that compared to at the bottom, those bottom segments. That's your, poor credit and slightly less poor, but, not ideal credit. So as a proportion of home loans that are going out, you could see compared to 2007, 2008, those the proportions are just way different. So most of the people and most of the money going towards loans today are all people that can't afford those loans. They have the job, the income, the credit score to justify the loans that they have. So even if they take a big hit, as long as everyone's not losing their job, which you never know could happen, but as long as they're not losing their job, they could still afford to pay those mortgages, whereas the last crash wasn't quite the case. Another thing Ryan brings up that I think comes up all the time, and it's just it's just natural to want to do this, is people talk about trying to time the market, and I think it's kind of safe to say that you're just not going to. You could get really lucky. When I think about it, there was a really steep stock market crash at the start of the pandemic in 2020. That would have been a perfect time had you known, to sell right before and then purchase a bunch of stocks at the bottom and then ride it back up, because now they're even higher than they were before. But I don't know anyone that did that, because everyone, was riding that high. And then when it crashed, no one wanted to cash out, understandably. And then no one knew where the bottom was. So, and same with housing. In housing, it's even tougher because, you don't need, You don't need a credit score to buy stocks. It's much less involved of a process. So with houses, you know, if you knew, hey, 2007, right before things started really looking down, 2006, and you sold your house and you wanted to rent until the very bottom, and then you could buy, well, the bottom really, I mean, the best time to buy it then would have been 2012. I mean, so you would have been renting for those 5 years, you know, and in that time, would you really have known that that was the right time? Things were going up. So I think this idea of cashing out feels like it's a good one, but you're really taking a big risk. And with the way that rents are going, I know tons of people are having a lot of trouble renting, especially here in Sacramento. There's just not a lot of homes for rent, and what is for rent is significantly more expensive than what it was just a year ago, or especially 2 years ago. So that idea that you're going to be able to just, you know, time the market, it's really, you know, I kind of go back to that adage of time in the market is better than timing the market. You're going to usually do better just holding the asset for a long time. Since you're using a loan, you get to pay down that principal. So, you know, say for instance, that last example, you would have then had 5 years of principal pay down that you wouldn't have gotten if you had just been renting that whole time, with your rents cost increasing as well. So those are the main points that I wanted to talk about today. No one really knows what's going to happen with the housing market, but I can say that I don't think that this situation is what was similar to what we were in before. So I'm not overly worried about a huge crash. Eventually prices will, you know, go down a little bit, but I don't know, is that going to be in 2 years after prices keep going up and then they come down, you know, 8% after being up 12% from where they are now? Or will they go down, you know, 8% from where they are right now? No one really knows, but I'm not really expecting a precipitous 50% crash, because especially here in Sacramento, still a very desirable place to live. California in general is that way. You are having more and more millennials that are trying to purchase homes. And the housing stock, we're just not building enough. And they're trying to ramp up. They're trying to do these things. They're trying to make laws and government to make it easier to start adding units, whether that's simplifying permit processing or allowing ADUs, that kind of stuff. But we're still lagging behind. So there's already that kind of built-in demand that I don't think we're going to just kind of get over. And that's all I have for you today. So if you found this video helpful or informative, please give me a like or a subscribe. It's really helpful to the channel. If you are looking to purchase or sell a home in Sacramento, please reach out. I would love to help. And if you have any questions, feel free to either post them below in the comments or reach out to me directly. I'd be happy to help. Thanks.